Good morning, traders. It's Thursday, January 23rd. Taking a look at the charts. Sp500 climbing the 5-day moving average continues to pop. It's been consolidating. This is the third day. Actually, let me get to the futures. Here's the Sp500 Futures. Yesterday, consolidated at the 5-day. Today, we're starting to poke through it. We'll see if we can recover, but if we start to break under it, we could start to get into a little bit deeper of a correction, at least down to the 20-day moving average, and that would start to shake the markets up. It could be enough to make bonds and metals pop to the upside as the safe haven plays. So overall, equities pulling back a little bit this morning. But if we take a look over at bonds, let's take a look at bonds. Bonds are up this morning, having a nice pop, up almost a 0.5%. We're up testing this previous spike high. You can see this candle here. We're testing that level. That is when we had some news come out a couple of weeks ago. We saw the markets rally, and then we saw it reverse back down. And so that is acting as a pretty significant resistance area just on an intraday basis. So it's tagged it, it's stuck there and pulling back a bit. Overall, once we start to break and hold above this level, really these two highs here are the critical level. Yesterday we closed at them, slightly above them, and today, as long as we can close above these two lows today, I think that's a very bullish sign, and it looks like the trend is on its way. We are long bonds. The big picture here is a massive bull flag, and it's starting to break out. If we look at the following trend lines across here, on average, we're kind of working our way through this area. We've got the 20-day moving average starting to curl up. We are making higher lows. We have broken at this point this previous high. We've also broken this previous slightly higher high as of today. Really, we need to break two previous highs. So today's going to be a really significant area because these two are the same level. I don't really count news-based spikes. So this is one high, and then this here is another standout high where the market fell down, had a bounce, and then sold off. These are two standout highs. So today we're going to break that. If we can close above it, that is a very bullish sign. That means we've got a series of higher lows and a series of higher highs. And it's not just a little bit of a pop to the upside. It's showing we've got significant strength, breaking two resistance levels, which is the first sign of a real strength to a new uptrend. So that's what we're looking for going forward in bonds, and we're going to have a nice move there at this point today. Looking over at the VIX up only 3.5%, nothing much, but that just goes to show there's a little bit of fear creeping into the market. Stocks are down, and money's going into bonds as the safe haven play. Now, if we take a look over at precious metals flagging out in a nice bullish formation. They still could trade sideways for all we know for a couple months, but at any point they could really start to take off. Overall, we are positioned in miners. Let's take a look over at silver. Silver is down 1%. Silver tends to over-exaggerate moves. It's more volatile. It's working on this three-wave correction, this ABC, which is a very bullish sign as well. Either way, it's a nice bull flag. If we look at gold miners, they're holding up a little bit different of a pattern. Hopefully we start to break out here to the upside and start to see this extend and break these highs. Overall, miners are already in that somewhat uptrend where price has been rallying higher. We've got a series of higher lows. We broke a high here. We broke this high back over here. We broke this significant high right across here. These are some pretty significant levels through here. So we have broken those levels, and now we're waiting for it to potentially consolidate here and eventually have a much larger break to the upside for the next half of this move. We got the first half and then the second half, which would be much higher as well. Looking over at energies, natural gas. Actually, let me just go back to gold miners and pull up the 10-minute chart real quick. Showing you this a couple days here. It's a pretty interesting 10-minute chart. We had these initial moves, this flag. We had Fibonacci extension and targets hit. It pulled back with the same box measured move down over here. And now we're back underneath this level. The market, you can see, let me zoom in a little bit for you here. You can see gold miners, they poked in overnight trading last night above this resistance area. Sellers stepped in, drove price back down. So we're back below this blue area. So we are set to trade lower. Looking at the pre-market data, it looks a little bearish. We've got a sharp drop. We've got a little bear flag forming in pre-market. We could see this continue to flush down and come to the lower end of this range, somewhere in this area. So I wouldn't be surprised if we see gold miners kind of shake around a little bit. But overall, they're still holding up in this consolidation phase, with this being the rally, this being the pullback, the second half of the move does point to still higher prices going forward. But when we look at this big picture, you can see we're clearly under resistance, and that's why it's struggling here. Once we start to pop and break here, we could very easily see it start to extend to the upside. And one of the ways to measure it is you can take this volatility. First we had this volatility from the rally to the top. You take that, you paste it to the breakdown, it gives you a downside target. And then you could take the same box, because it's the same volatility, you could take this, move it to the upside. Obviously that brings us back to this previous high, which would put us into this potential kind of double top. We got this move, we got the pullback, we got the second half of this move pushing up into the upper end here. So we'll see how things shake out. Overall, we need to see gold miners break above this area, this 4160 area, and close above it. And then I think we could really start to see it pick up speed again to the upside. Looking over at natural gas. Natural gas had a big breakdown early on the week. And if we look at where price gapped down and then had a huge flush out in the market, if we were to just draw a horizontal line across here, you can get an idea where that level is. We go right across here, and this was the low of the previous session. You can see how the market has recovered overnight. It's had some nice pops and rallies with some good volume stepping in. Looks like we're getting some more short covering. Market is up 3.15%, and we tagged this level. This is the level. So gaps tend to get filled, and also the lower level and the upper level will act as a support or resistance area. So you can see how we've come up to this level. Just zoom in a bit. We poked up into this area, and then we had a huge volume spike, meaning there's big sellers at that level where they're exiting and they're pushing the price down. Overall, though, we got some nice momentum here in pre-market trading. We got on-balance volume climbing very nicely, which means we got a lot of accumulation going on. And hopefully we'll start to see this really pop and break. Once we start to get this gap fill, I think we'd be really off to the races. If today can hold up, we could really see a big short squeeze today and tomorrow for the closing of the week. We could see a big recovery. That's the game plan here. Looking over at crude, down 1.8% this morning. You can see yesterday, let's just go back to the daily chart here. Here is the daily chart yesterday. Big down day today, a gap lower, continuing to extend down. This 55.20 area is a fairly significant support zone. So we're working down to that area, but the ultimate support low that we've talked about for a while, if the market was to break down, is this 51.52 area where price could continue to extend. And if we throw a Fibonacci extension, now that we got this pivot high and this breakdown, we can throw a Fibonacci extension on there and see where this goes. There could be a couple different levels. The question is, do you go from the spike high or not? I typically go from somewhere where a bar closed or opened, and we'll go down to here, we'll go back to here. This is the conservative downside target, would be 53 for this to continue to move to the downside. If we were to draw one that's more extreme using significant pivot highs, you could go from the pivot high, you could go down to this pivot low, and then to this pivot high, carry it forward. And so that gives you a conservative area of support and resistance, or of targets, more or less. This is where first target would be. Somewhere in this area should find support and have some type of bounce or pause. This is the next downside target box where price could go. So we could very easily see this come down here, potentially bounce, consolidate, and then come back down into this box. And this falls in line with these previous support zones. So that's kind of how you can get some rough targets on downside pricing. Anyways, that is it for this morning, and I'll talk to you in a little bit. Bye-bye.